During the first 26 years of Missouri's statehood, there was no tax on income. It wasn't until 1917, 92 years after we became a state, that Missouri passed a permanent income tax. It was a mere 0.5% and promised to make up for Missouri's turn-of-the-century deficit spending. Prohibition came on the heels of Missouri's new income tax and cost the state considerable revenue. The legislature responded by raising the income tax rate to 1.5%. The income tax brought in almost twice as much as was projected. In a rare move, Governor Hyde made income tax reduction one of his major policy goals, and in 1921, the income tax rate was reduced from 1.5% to 1%. In October 1929, the stock market crashed and the Great Depression began. In 1931, the Missouri legislature pushed through a graduated income tax, where the top rate of 4% applied to incomes of $9,000 or more. An income of $9,000 made you a very wealthy person, roughly equal to someone making over $130,000 today. Average per capita income in 1931 was only $487. The state income tax remained unchanged until the 70s. Governor Warren Hearns intended to expand education and health services funding, and revenue was falling short. Hearns planned to cover the new spending by raising the income tax to a top rate of 6%. Senator Earl Blackwell, a Democrat from Hillsborough, blocked the governor at every turn. In 1969, he put together a tax package to challenge the governor's plan and controlled a voting bloc of young Democrats opposed to the tax and spend plan. Despite Blackwell's efforts, the tax increase passed. Not to be deterred, Blackwell mustered enough signatures to put the question of an income tax increase on the ballot. This was the first and last time Missourians got a say on the state income tax. On April 7, 1970, voters rejected Proposition 1, overturning the Hearns income tax increase. Blackwell fought tooth and nail against the income tax increase, even filibustering, but Hearns kept the legislature in Jefferson City for 4 special sessions that year, until he finally accomplished his objective. By the last day of 1970, Governor Hearns had signed a bill into law that did exactly what the voters had rejected earlier that year. This created the tax table we operate under today, with no adjustment to wage rates. The income tax rate tables were never adjusted for inflation, so as Missourians experienced income inflation, more and more people qualified for the higher rates. By 1980, average per capita income had passed $9,000, so most incomes became subject to the highest rate of 6%. Almost 5 times more revenue is being collected due to inflation. The last 80 years have been a gradual but significant income tax increase on all Missouri earners. Missouri may have the most regressive, complicated income tax table of any state, with 11 brackets, all under the same $9,000 in wages since 1970. Missouri revisits the question of income tax about every 40 years, so it's natural that we are again looking at how we tax. This time, we have just shy of a century of state income tax performance to study. We can repeat the mistakes of our past, or we can learn from them and create a better path forward.